Hello and welcome back to Talking Markets. We are joined today by Maurice Pomery, the Senior Strategist at Corellian Academy. Maurice, thanks for joining us today. Let's dive straight into the UK. Obviously, last week we had a shock 50 basis point rise. Inflation failed to fall and core inflation actually rose from 6.8 to 7.1.
That's right.
Why is UK inflation so sticky and do you think it's become entrenched?
Well, there's a good question, to be honest. And I think realistically, what we need to do is ask what's happened here. And I think we need to take it back to Brexit, really. So the fact that we've had this labour shortage has been quite a major drag on the economy, but also pushing wages higher. We've got a shortage of workers. There's no two ways about it.
Yeah.
But the issue for me is that the Bank of England has also been rather late to react. They've been relying on pretty poor forecasting levels. Not performed particularly well. Credibility, a bit of an issue here. But this Brexit issue, pushing up wages, has more impact on the UK because the UK has very low productivity levels. When you get low productivity levels, any wage hikes feed much more quickly into inflation. So that is an issue. We've got rental prices going up as well, which is going to probably sustain itself for a while. So higher for longer in the UK looks to be a common theme now that's believed, but what will the damage be done by higher rates? 6% rates, if we get there, is going to make a difference to a lot of mortgage payers. The feed-through from rate hikes has been delayed slightly because of the fixed mortgage rates that we've got. A lot of those are rolling off, so it is going to hurt. So I think the market's at a bit of a level here where, whilst we're seeing rising gilt yields, what we're always also seeing is fears over what's going to happen to growth, and therefore sterling may actually start rolling over, even though the yield differentials is quite wide. So it's an interesting situation for the UK. I do worry a little bit about foreign investors' appetite for UK assets. We seem a little rudderless at the moment. I'm not particularly enamoured by the way the Bank of England has handled things to date. They have played a bit of catch-up, but again, what damage is that going to do?
Yeah.
So is inflation ingrained in the UK? I think it's becoming that way. It's a very topical subject everywhere I go in life and way outside of financial markets.
Yeah.
So I think realistically there's this fear. Now at the moment, services spending is holding up. Now most of the major economies are seeing this same thing. So PMI services data still above 50, which is that cutoff level between contraction and expansion. And I think as long as that holds, then I think there's a danger that we see higher rate hikes because wages are not coming off. There's still some big strikes out there asking for quite considerable rises as well. So I think, the private sector and the public sector are going to see wages continue to rise. Yeah. Rents are starting to go up because people are worried about house prices and increased mortgages. And I think that puts the Bank of England slap in the middle of a stagflationary crisis. And I think that is one of the toughest things for any central bank to deal with. So is inflation ingrained? I think it's dangerously close to being so. Is growth safe? I mean, the bank itself is forecasting no recession. Really? I'm not sure about that. So, it's a matter of time and how long this lasts. But there is also a slowdown in the global economy, which obviously is, at some point is going to affect the UK as well.
How do you see the outlook for the UK economy, for UK companies? We saw the FTSE 100 gains were effectively wiped out following the rate rise. How do you see the outlook for the UK economy?
Well, that's interesting because, let's face it, the FTSE 100 is an international index. It's not really the bellwether or the barometer for economic health for the UK. Look underneath that, and the 250 is performing really badly. So UK assets are already underperforming. There is some talk of people beginning to nibble at gilts because I think the Bank of England can't go much further. But the problem with that is that, if we get disinvestment from the UK, and let's face it, the UK has a lot of debt to sell, so issuance needs to be bought. And it's going to have to attract buyers with higher yields. And so this is a real problem. I think the danger for the economy is that the services sector catches down, if you like, to where some of the global growth issues and higher food prices and higher rents and everything else stop people spending on non-essentials. So if that does, because services spending, as I'm sure you know, Tom, is about people enjoying themselves. Yeah. Bars, restaurants, hotels, traveling, and all these things. So, it seems like we've got this last hurrah in the summer where people are saying, you know what, I think times are going to get bad, but at the moment I'm going to continue enjoying myself. my problem is I'm not sure that lasts through to the winter.
Yeah.
When energy costs start coming back in again, I think there's going to be an awful lot of credit card bills that are going to struggle to get paid through the winter. So I think there are issues coming as we move forward. The fundamental structure of the UK doesn't look as rosy as I think the Bank of England seems to be suggesting. But let's face it, their track record on forecasting anything recently has been absolutely shocking. And even they seem to be dumping their model.
Yeah, and quite a lot of the inflationary pressures also on the supply side, aren't they? And so the Bank of England have only got one tool, right, which is to raise rates.
They have.
So do you think that it will actually control inflation, or do you think the supply side has to kind of come down first?
I think some of the supply issues have been fixed, and that's why we've seen peak inflation and a drop off in headline. The problem is the core, and I'm sure all your viewers understand the difference between headline and core. Core extrapolates food and energy, which is very volatile. And the problem is underneath that, it does look like they've got a battle on their hands to get in front of this because they've missed an opportunity. So for me, I think there really is a danger that the Bank of England is at risk of making another mistake. Could they go too far?
Yeah.
Because when these mortgages do roll over and the new ones come in and the consumer stops spending, how quickly will that drop away? I think it's very difficult for the Bank of England to get this right now. So as an investor, I'm not sure that the UK is the safest place to be or the best place to be at the moment. And the other economies look a little stronger to be able to take higher rates, i.e. the US. And if we do get a crisis and a global slowdown, then the dollar will probably attract again. So sterling has a bit of an issue going forwards, but rates at 5.75%, 6% plus, I think, against the Bank of England's thoughts, I think could push us into recession.
Where do you see the terminal kind of rate of the UK being?
I do think the market's pricing in about 5.75% at the moment. There is a danger it could go higher. It depends how quickly this move now can impact. And we have to remember that interest rates work with a lagged impact on the real economy. And so we may not know that for a while. So again, this brings me back to this winter, autumn period when I think, things are going to start changing quite quickly. So, 5.75, I could quite easily see. I think, it's hardly any way away from where we are now. 6% is a danger. I think 6% makes a difference to the global market's view of what's going on in the UK.
Yeah. And we've also obviously got the central bank meeting later this week. Yeah. What are you looking for during that meeting?
I would like some explanation from Mr. Bailey about exactly what his plans are. But of course, they have been rather just blindly following other central banks, particularly the Fed. When they thought they were going to pause, the Bank of England was talking about a pause. What I'm not hearing is how fundamentally different the UK economy is from others. And I'm not hearing enough of this. And I think, look, the Bank of England is not only complicit in this, the government is as well. We still have low productivity. We still seem to be struggling to find our identity since Brexit. And I think some of that is the problem as well. But also we have governments that are continuing to spend, stimulating inflation. So that's not helping either. And then we have the fact that the Bank of England, if you take real rates and extract inflation from them, what we call real yields are still very low. And that, again, is stimulative for the economy. And this is why we're still seeing services spending and high inflation. And at the moment, I can't see that going away just yet. But it looks like the Bank of England is finally getting serious about trying to get in front of it.
Looking kind of ahead to the economic calendar this week and beyond, what are the key events you're looking at and what do you expect from them? Well,
after a big week last week, Tom, I think we've got an equally difficult one this week as well. We've got this economic forum that's hosted by the ECB. It's a bit like their version of Davos.
Yeah.
So all the central bankers, including Powell, Bailey and all the others, meet in Portugal in a place called Sintra. There's going to be panel discussions. Now, this isn't politicians giving dumb questions to central bankers. This is pretty serious conversations about what's going on in global economies. I think it's going to be fascinating to hear what they have to say.
Yeah.
We've got some pretty damning data out of Europe recently. Just last week, we saw the PMI data, both services and manufacturing continuing to fall. German data is on its knees. And then we saw that slide in French data as well. This at a time when Lagarde is still talking very hawkishly, and markets are suggesting one, but maybe two hikes still to come. So what damage will that do? Will they start to focus on growth? Now, the ECB has one mandate, that is inflation. But the political pressure from the political leaders on Lagarde to concentrate on growth, I think is probably going to grow. It's certainly going to hit Bailey pretty soon.
Yeah.
So this meeting, I think, is going to be really interesting. Within that week as well, coming up, we've got European CPI, which inflation data, of course, is so important to everybody. We've had the IFO survey, business survey from Germany, data on its knees again.
Yeah.
This is the engine of growth for the EU. And with France joining in, the two biggest economies within the EU, is that going to impact Lagarde's structure at the ECB regarding monetary policy? I think there's a danger it could, but they may want to hike once or twice just to get ahead of this again. But it's going to be a close call.
Thank you for watching. Don't forget to like and subscribe and join us next time.